Hello everyone, just another sunny day in Sydney, although the clouds are beginning to roll in. As they are obviously in equity markets, we've seen some significant downside in US, European, Australian stock markets and elsewhere in the world. And that is, I must say, pretty much as we had forecast. Mind you, I was trying to sell the rally a little bit too early on the way up, but I did issue very strong warnings throughout last week as the market went sideways that Friday could even be a Black Friday. Well, it wasn't quite that, but we are seeing continued further powerful downside, if I may say, and that's because the fundamental backdrop is really quite ugly. It's almost as if markets took this bizarre meandering sentiment detour away from what were the very obvious facts that the Federal Reserve has already said that it will continue to raise interest rates even if there is economic pain. Inflation is still, US inflation is still up at 8.5%. If it was 4.5%, the Fed would be thinking of hiking. So at 8.5%, it definitely will continue. My tip is a 75-point rate hike. Of course, at the moment, all eyes are on Jackson Hole and the meeting there, and that is very much a geopolitical event for Jerome Powell, and so he's going to want to be seen as the caring central banker, but yet the strong central banker. So expect his speech to contain references to keeping an eye on mortgage stress, keeping an eye on employment numbers, keeping an eye on the manufacturing indexes, etc., because he is concerned that there could be economic downside, doubling up on the higher consumer prices generated by the Fed raising interest rates. He will say all of that, but then his conclusion, he will lead into his conclusion, which will be, yet for the moment, we do see the US economy as being resilient enough to absorb some interest rate hikes, and we do need to fight that inflation dragon. Now, what the Fed doesn't realize is that unlike previous economic cycles where inflation was due to excessive demand and an overheating economy, their interest rate hikes will have very little impact on this inflation. In fact, inflation from here on in for the United States is most likely to be determined almost entirely by the oil price. And we've seen the oil price be resilient over the last week against a falling equity market and an unwinding deleveraging process across almost all markets. I have a feeling the deleveraging process has already happened in the oil market in anticipation of a global economic slowing. If it continues to remain firm here as the US dollar is firm, then probably oil's going to move back up in the coming weeks and months, and that's going to see inflation again spike higher. For these reasons, the Federal Reserve will continue hiking rates, and over in Australia, very similar reason, expect inflation to continue to grind higher, if not spike higher, and for the Reserve Bank to be raising interest rates even as Australia faces its own domestic economic headwinds at the moment. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.